Okay, folks, we are live, and what a big news weekend. President Joe Biden has dropped out of the race, and it appears as though Kamala Harris is the heir apparent to the Democratic ticket. So it's amazing how the voters had no say in that one. But so much for primaries, and this is the time and day and age we find ourselves in. So knee-jerk reaction that I had was that in all probability that the markets would move up higher. And technically, looking at the E-minis right now, we are up. We're gapping up here a bit, a little bit of backing and filling, no conviction in either direction. And it makes sense due to the fact that last week we closed out the week pretty poorly. Intraday, we were pretty oversold, 15-minute, 30-minute charts, etc. We're due for a bounce. The question is this news sufficient enough to cause that bounce? Or uh, do we continue to sell off here? And we'll talk about historically what has happened during a lame duck session of a presidential cycle, where the president-elect has, uh, in essence, run his course during this term and is just waiting out the succession of the new president. So normally you don't get presidents that resign. Last one, I believe, was, of course, Richard M. Nixon. Before that was Lyndon Baines Johnson. So it's rare that it happens, but certainly we've had many a lame duck presidency, and this is certainly a lame duck presidency. What is a lame duck presidency? It's basically the president has no more power for the most part. He's not going to be able to push anything through. He can do pardons. He could do executive orders and whatnot, but pushing big legislation through Congress ain't going to happen. So let's begin with first going over to the notes to make sure my audio is good. And audio is good. Thank you, Franklin. Sticking with Franklin for a moment. Good afternoon. And can you take a look at KGC? KGC. Yes, we can. Most certainly. KGC. Gotcha. William, now the Democratic superdelegates are able to vote in the contested convention. Yep. They haven't had any voting power since 2018. Yep. So much for primaries. A daily chart of CrowdStrike shows on-bounds volume collapsed in June. We were warned way ahead of time. Okay, we'll check out the chart. All right. And hello, Larry. All right, so it looks as though we're firming up here. We're showing a red candlestick on the E-minis. However, we are up, and we may be flirting with taking out session highs in the next few minutes. So let's throw up an alert there and see if that happens. Hey, Falcon, welcome. Okay, moving on to the NQ. Up over a quarter percentage point at session highs. This is the NASDAQ 100. Now, we booked, this is basically the triple Qs of the futures market. Now, we booked some profits on our short of the triple Qs. We were long of SQQQ, which is a leveraged product, and we were long of puts. And puts obviously have a finite lifespan. So we had profits. We made them real. And we had a pretty significant position in the SQQQ. We balanced that out, raised some cash in anticipation of what appears to be perhaps a bounce here. Is this the ultimate bounce? Do we stop here, consolidate, and move to all-time record highs? I have no idea. No idea. I doubt it, but you don't know. So we'll remain short until the market says you're wrong, and we will raise cash as needed. Now, I did put out a video over the weekend. It's the first one in a while, and it's on YouTube. I should have posted it on the website. And it's I posted on Facebook as well, and we're streaming to Facebook right now and Twitter, and of course YouTube. Hello to all our friends on those channels, and we haven't streamed onto Facebook in quite some time, so it's good to be back connected with Facebook. And of course, we've been streaming on YouTube and Twitter for a while. So I did a video over the weekend, my top favorite charts for the new trading week: Qualcomm, Texas Roadhouse, and that's quite possibly a short. Uh, what else? Scott's Miracle Grow and Palo Alto Networks, and one other one that'll hit me. I forgot about it, but it's listed on YouTube. So please go check it out. All right, so the triple Qs gaining strength here, up 0.28%. Let's check in with the Russell 2000. Now they're down fractionally. The thing that we need to point out, and we're going to be talking quite a bit about the Russell 2000 today, the Russell 2000 are you small cap stocks. Now, a big event happened last week, and due to the fact that you saw so much selling mid and late week across the board, not much was paid to the small caps, and they broke out to multi-year highs. And we'll talk more about it in greater detail. A really, really nice week for the Russell 2000. So we had been anticipating sector rotation. We got sector rotation. So Russell is down fractionally. And frankly, we are putting in, this is a 15-minute chart. This is an outside reversal bar. So a little bit of pressure here on the Russell 2000. Let's see whether or not they take out session highs, or do we break to new lower lows? Okay, so our alerts are set. Let's go back to the NASDAQ 100 one moment. I want to know whether we take out prior 15-minute higher highs. Because while we're putting in higher lows right now, we are not taking out prior highs. So until that happens, this is all just dog and pony show to us. We want to see higher lows, higher highs, and then we start rethinking whether or not we want to be short of the NASDAQ 100. Taking a look at the Dow. Dow's struggling here a bit. It's up, but only fractionally. We're going to do the same thing here. Let's see whether or not we take out prior 15-minute higher highs. And I normally wouldn't care about a 15-minute higher high, except for it's a Sunday night. I want to get a vibe for the market. I want to get a feel for as to whether or not this gap up in equities is going to gain momentum, or is it going to fade, and are we going to break down to new lower lows and continue with the trend that we saw last week? So Sunday nights may be a quiet night, but you have your alerts fired off, and as they start firing off, may not be during this live stream, but a hour, 2 hour, 3 hours from now, you get a vibe for how we're probably going to open up tomorrow morning. So that's why we set these alerts up, and they have value. So let's continue on here. I think I had the mid caps teed up, and I do, and they are up fractionally as well. So we're going to do the same thing. Are we going to put in new 15-minute higher highs, or do we break down to new lower lows? And that's all we do. There's nothing else to do except for watch and take the pulse. Take the pulse of the overall market. Now, I'm pretty confident that we're going to get a rally this week in the equity markets because we're somewhat intraday oversold. Let's take a look at the currency markets. The dollar's pulling back here. Dollar had a very strong week last week, and they're gapping it down. The question is, do we stay down? I always call the US dollar the Michael Myers of currencies. Just when you think it's dead, it comes right back to life again. So we never want to underestimate the power of the dollar to rebound. Now, of course, for the dollar to stay down for any length of time, you need to have strength, I should say, strength in the euro, which is up, but we had a bearish reversal week last week. So it's nice that we're up. Again, do we break out to new higher highs? You could see it's struggling to break through this resistance level. So we want to know, do we break out? And until we do break out, we're bearish on the euro. We're bullish on the dollar until the market says you're not bearish on the euro anymore. Simple as that. We don't make the rules. The price action tells us exactly what the rules of the game are. We just don't want to ignore it. Taking a look at the yen. The yen is flat on the session. You could see they are trying to rally it, but they're struggling here. I believe the yen closed up on the week last week. Let's move this up here. You could see that they rallied it right into the prior 15-minute high, and it got rejected. So let's take a look at last week's price action here. Yeah, we closed up. We had 3 consecutive up weeks on the yen. Unheard of in modern history. 3 consecutive weeks up on the yen. Shocking. Now, taking a look on a weekly time frame at the euro, it had a bearish reversal week. It closed down because it hit what was prior support back here in red is now the upper band of resistance. So I don't think that the euro is going to stay down. We may just consolidate here and move up higher. I'm somewhat bullish on the euro. I won't get very, very bearish on the dollar until going back to the Japanese yen for a moment. You may be saying, why is he talking so much about currencies? We're here to talk about stocks. The reason is that we own gold stocks. We own emerging market stocks. And if we want them to do well, we want to buy them. We need a weak US dollar. So it's very, very important that we know our inverse correlations as well as our correlations. So looking at the Japanese yen, I think that once we start breaking out to new higher highs, then the dollar's got a problem because you have euro moving up, yen moving up, breaking out to new, not just higher lows, but now higher highs. That's a new bull market. You get a new bull market on both of those names, the dollar is all sorts of trouble because combined, the euro and the yen make up, I don't know, 75, 80%, not 80%, 75% of the Dixie basket. The rest is, the Swiss franc and, Canadian dollar and Aussie dollar. Those are pittances compared to the yen and the euro. So let's watch the euro yen trade very, very carefully because it matters to our precious metal trades and our emerging markets trades. Sticking with the macro picture here, I want to take a look at yields. Yields had a very strong week last week. Let's clear this all up. Very, very strong week last week. Bullish reversal bar. It didn't do anything technically significant. It didn't close above its, I think this is an 8-period moving average, certainly not above its 21-period EMA. So I still have to give the edge to long bond holders. My problem with this chart is this. is that I'm looking at here is a cup, and I've already drawn the lines for the handle formation on the 10-year yield. And we're going to talk more about this in a moment because it could be a catalyst for as to why we're seeing the yield curve break out, at least on a weekly basis and on a monthly basis for that matter. So that's a harbinger of bad things. So we want to keep an eye on it. So 10-year yield, it's firming up here. It didn't do anything technically significant last week except for flashing a 1-week bullish reversal bar. But we want to keep an eye on it because we have a very, very strong pattern here of a cup with handle formation. You could even call it a saucer with handle formation. Let's go to comments. Falcon, welcome. Talon, welcome. Good afternoon to you, pal. Hope your weekend went well. Thank you. Yes. Can we check out some steak with TX? I did a video on that. I did on the best stock charts for the new week. I spent a good 5-10 minutes going over TXRH. Try it on YouTube. Pete, good evening to you, my friend. Okay, let's move on. Let's talk about commodities. Before we go to commodities, I want to check in with Bitcoin. Bitcoin up another percentage point. It's simply on a tear. Let's clear all this off. Now, one of the other symbols I went over the weekend on the best stock picks for the new trading week is Coinbase. Now, Coinbase closed up in a down market or a weakening market. And it's highly correlated to Bitcoin, which was up last week in a very significant way. Now, what I think is going to happen here on Bitcoin is that you see this 21 period EMA right here in orange. I think we need to pull back and tap that. Just give it a little tap and bounce off of it. At such time, what we'll be looking to do is looking to put on a long trade on Coinbase. Let's throw up that chart here. Sorry about that noise. And because Coinbase had a monster week last week. But again, we're not going to chase it. We needed to do a little bit of a check back and do a retest of its breakout point. I'll put up a little alert here, letting us know when that fires off. Because we will not chase it. I don't care how good the chart looks, we will not chase it. We need to trade with an edge. If we can't find that edge to begin our bull operations on a stock, commodity, whatever, there's no sense in getting involved. You got to have an edge. The money is made on the buy and then sitting patiently and letting it work for you. Okay, now let's move on to the commodity arena. I want to check in with gold. Let's go back to the 15-minute view. Before I move on here, Coinbase 15-minute chart looks like a coiled spring. Looks like it wants to move up higher tomorrow morning. We will not chase it. Gold catching a bid up a third of a percentage point. If you take a look at a weekly chart of gold, you could see that we had broken out. We did all-time highs last week on gold. All-time highs. We had broken out, and then we pulled back to do a retest of the breakout point, which is represented here by the 5-period EMA or SMA, whichever one it is. What is it, EMA or SMA? Exponential EMA. So I want to know here, if and when we put in a lower low, If we put in a new weekly lower low, we avoid like the plague. But if we consolidate here for a day or two and we see the gold firming up and the dollar weakening and euro yen moving up, then we're probably going to look to add on this pullback to our gold positions and to our gold mining positions. Perhaps even silver. Speaking of silver, let's bring up that chart. That was really weak last week. And here you have it. I mean, it tried to break out. Let's redraw these. Clear everything off. Clear it. Boom. Done. All right. So we did have a breakout here. And we're still holding it. The problem is, I guess we could do it this way. We need to hold support here. And if we spend a few days consolidating at these levels and we do not put in new weekly lower lows, then we can begin to add more to our silver position. So hey, TC Burton, always test your updates before. Oh, you're talking about CrowdStrike? Yeah. Hey, Bob, what do you think about the hard bounce for natural gas come the fall? Natural gas is a mystery wrapped inside of an enigma. Let's check it out. It's a great chart to talk about always. So we're up at current. Well, actually, I'm sorry, we're not up at current. We're down, but we have not made a new weekly lower low. I think that this needs a few days worth of consolidation before. Well, it's actually looking okay on a 4-hour chart. We do have higher lows getting put in here. Euro just hit a new higher high. That's only on a 15-minute basis, though, folks. So let's not get too excited. I want to know if Natty Gas breaks out here. Okay. Let's see how it looks on a daily time frame. It's trying to firm up here. Oh, look at this 15-minute reversal bar. Look at this. Look what they did. They gapped it down, and then they reversed it. If they take out this high here, Nat Gas is going to rip. This is the mini contract. I'm going to throw out a contract here. Okay. So I just throw in a contract here, a little bit of a test. I'm not going to add any more until we get a breakout to new higher highs. So I just put on a long bet on natural gas pressing up higher. This is the MNG. This is the micro futures. And I want to put a stop in. I'm going to keep the stop pretty loose. All right. I don't know why they just rejected that order. Anyway, more to come on that. I own Palladium. Palladium finally catching a bid here. This did not have a good week last week. I will not be buying any more until we break out to new higher highs. Platinum catching a bid. Now I want to take a look at copper. Copper's a train wreck. Really bad stuff here. I think copper goes lower. Let's check in with, I skipped over oil, which is a no-no. Even Bob, OPTT, watched your video from years back. I haven't taken a look at that stock in a long, long time. That was around the time that these companies were really receiving a lot of subsidies and whatnot. We'll take a look at it on the on TrendSpider. I'll get a better vibe for it there than on Thinkorswim. Daniel, Camilla, really? I think it will be someone else. I think they're testing the waters on that. It's the way I got yesterday. It was they were going to run Hillary. Today it's Camilla. I don't think they know yet. You know, but I think that they did a lot of negotiations with the Biden camp, and if they didn't think it was going to be Camilla, I don't think that he would have endorsed. So, I hope it's Camilla versus Hillary. That's I really hope it is. They say they're saying to buy UNG. Be very, very careful with that. UNG was very weak last week. You know, we're putting on a dead count bounce trade here. That's it. It's making lower highs and lower lows. Boyle, which is a natural gas leveraged product, made new all-time lows. But you see that a lot with leveraged products, the disconnect from the underlying commodity, in this case, that they're tracking. Let's go back to, I don't feel good without having a stop loss order on natural gas. I don't know why they wouldn't let me put that stop in. Well, we're up on the trade. That's always nice. But I want to stay on top of this. Really, really tight. They call natural gas the widowmaker trade for a reason. Okay. So that's natty gas. We almost went all week with a 250% intraday gainer last week. Serve, okay. Michael, let's take a look at it. We don't know. It had a bad week last week, but it is in a very, very tight trading range. It's /CL. This is light sweet crude, and it's up. At current, it's an inside day, no new low day over day. That means nothing until, again, we close out the day with no new lower low, and then we start putting in higher lows. $15-minute view. It looks like it's setting up for a pop here. I'm not a day trader, but if I apply the rules to swing trading using daily and weekly charts, and I'm looking at this chart here, we're putting in a higher low. We've closed above the 5 period and the 21 period EMA. So the moving averages are going in the right direction for a very, very short-term swing trade. Anyway, longer term, we don't know, right? It'll take a few days to understand whether or not the selling pressure is off of light sweet crude. What else do we need to go over? We need to go over agriculture. Where are my ag names? Well, you know what we didn't look at? I want to take a look at live cattle. I think that if the market senses that you're going to get a Trump regime, you're going to see a break in live cattle prices. And I mean break down. So you can see we're setting up here for potential double top on live cattle. It's not a double top until you break down below this support level here. And the low was back in the week of April the 8th. So right now, I'd be a little bit cautious on live cattle. My New York strip is just way too expensive. I'm eating spam. All right. Corn. Continuation move lower last week. New lower low, but no week over week lower low, meaning we didn't take out the lows of the prior week. So now I want to know, does corn take out the highs of last week? Until then, I really don't care about it. Soybeans. Soybeans continue to break down. Avoid. Wheat. Wheat is not looking good. So we had the natural gas just moved to a new higher high. So we're now positive on natural gas. Good way to start out the week. Just throw in another contract. We only want to buy on strength. And we scale in. We'll scale in. We have another alert set above. I want to know if we roll over here. Okay. Hey, folks, if I could just ask you folks to give me a like and a subscribe to the channel. I got to grow this YouTube channel. I'm stuck at this subscriber number. It's driving me crazy. We're growing, but it's too slow. Gold futures hitting the gas. Let's take a look. And this is all has to do with the dollar pulling back. Talent, thanks for that heads up. So we want to know Do we break out to new higher highs? And all this is doing is giving us a vibe for how gold is performing as we enter the new trading week. We're just doing our homework now. This is like a feeling out operation on a Sunday night for the overall market. What else do we? I think we did everything here. We have a lot of alerts set up. We'll come back if and when they fire off. Copper's so beaten up. I don't even want to look at it. Yeah, it's still a train wreck. Could sell puts here on copper, deep out of the money put contracts, but I'm not going to do that now. Okay, let's. Bob, I think the whole market is in trouble for many reasons that run so high, and no real reason for this. Then tech so overbought still after this weak dip. Yeah, I can't argue with you. I've been around long enough to appreciate one thing is that at any given time, there's always a reason why the market could sell off. But you need broad consensus, and then you need a catalyst. Right now, the broad consensus is that Tom Lee drives a lot of the Tom Lee's an analyst on CNBC. Happens to be pretty good. He helps drive consensus, and right now that consensus is the path of least resistance in this market is to the upside, and that would be accurate until such time as it is not. So we got a pretty nasty sell-off last week in tech land. But this coming week, we're going to go over this right now. We have a lot of earnings coming out. So if those earnings meet or beat and guidance is good, then all is forgiven and we can hit new all-time record highs. So we want to we know we have problems out there. We have debt, we have warmongering. It's all around us. The question is, when does the pin prick the bubble? And could be I have one catalyst that we're looking at right now, which is the treasury market. And we'll talk about that in a minute. I have a chart. So let's talk about what's going to be happening this week. We'll check back in if alerts fire off. Okay, so let's talk about economic data. And let's be honest here. This is not going to be a week driven by economic data, with the exception of two reports. And we'll go to them in a minute. But let's begin. Tomorrow, nothing scheduled. So that could allow for the markets to bounce here or to continue down lower. It's a no news day. Tuesday, existing home sales, not a huge one. U.S. services PMI and manufacturing, that's pretty important. Any read above 50 is a sign of expansion. Any read below 50 is a sign of contraction. Wednesday, nothing big there. Thursday, we get Q2 GDP. Durable goods, this is a biggie. So we want to watch this one. What are durable goods? Those are your washing machines, your dryers, anything that is a big ticket item and lasts several years. But the big report next week is this one here, the PCE, Personal Consumer Expenditures Index. And that is the Federal Reserve's favorite measure of inflation. So let's keep an eye on that. Let's keep an eye on personal income as well. Because if you see a big move up in personal income, well, then that's viewed as inflationary. In terms of anticipation of a rate cut in September, we're at 97% going out to November, 99% December, more rate cuts. So they're projecting rate cuts as far as the eye could see. Natural gas is now moving up higher. And now the shorts are beginning to cover, because what did we do? We took out this prior high here. So it all goes back to this. So it's all quite simple. higher lows and higher highs, right? So it means nothing that you put in a higher low until you break out to a higher high. And I'm not going to put on any more here because you're going to get backing and filling and whatnot. So if we settle in here, stabilize, we let these moving averages play catch up. Maybe I'll throw on another couple of contracts, but not until then. We're already in. We have a position. We're good. Uranium. I haven't looked at uranium. The last time I looked at uranium, I think it was Franklin, one of our members, that asked me to take a look at it. That's symbol URA. We could take a look at that one. YouTube algos like human faces. You will need to zoom in on your face with the camera. Sounds silly, but it's true. Really? I can't. This program won't let me. They want to see this face. That's crazy. I'll lose subscribers. I'm thinking about wearing a burqa. All right, so natural gas looking good here. I just had a couple of alerts fire off. Natty gas is really moving now. We're going to have a little bit of resistance in a few minutes. Okay. Moving on. Look who it is. Patrick. What are your gold positions? Physical and gold stocks. Pretty much it. Silver stocks and AGQ leverage product of silver. So that's the position. How's the grandson? Yes, they want to see you. I'm serious. All right, I'll have to figure out something to do about that. This software that I use, I need new live streaming software. They won't let me move my picture around. What is this here? What about this? Yay, YouTube. They won't let me move my picture over to the left side, which drives me nuts because I'm always worried that I'm covering up a chart. So I digressed here. Yields are, how do I get out of this? There we go. Okay. Fed rate cuts going out to the eye could see. Just back from LBI, Long Beach Island, New Jersey. GTN makes most profits in ads. It's free to watch. Okay. Hope NG holds. Got him Boyle. Oh, good for you. Good price. 7. Busy man. Busy man. Okay. Yes. How's he doing? He's the only one I know. Long Beach Island. That's beautiful down there. Beautiful. I haven't been there since I was a kid. All right. Schiller PE ratio. We're at 35.5 on that. We're overbought. Still, even after the sell-off last week, Buffett indicator overvalued. So it only took a slight little bit of froth off the markets. Now, here's what's going to drive the market this week. Up or down, I don't know which. We have some earnings coming out on Monday, but not big ones. It really begins with Tuesday. And in the morning, you got a lot of it. Spotify, UPS, GE Aerospace, GM, Coca-Cola, Comcast, Lockheed Martin. And then, of course, after the close on Tuesday, Tesla, Alphabet, Visa, TI, More banks. Capital One, Cal-Maine. This is an egg company. Before the bell on Wednesday, Thermo Fisher, General Dynamics, Boston Scientific, Chipotle after the bell. Very, very volatile stock. I think they announced a split there. Ford, IBM, Newmont Mining, that's a gold company, gold stock. Whirlpool Waste Management. Thursday, Honeywell, Industrial. This chart's looking very, very good. Southwest Airline, Valero, American Airlines, Texas Roadhouse. This is what I did a video on over the weekend, posted on YouTube. It's got a lot of overhead supply on this stock. I wouldn't be a buyer here. I was initially bullish on the stock. Then I took a look at the weekly chart and the overhead supply. Then I got nervous. So I was optimistic. Now I'm a little bit pessimistic about Texas Roadhouse. Juniper, 3M, big week. Big week in terms of earnings, folks. So buckle up, expect volatility. All right, so Joe Biden drops out and Kamala Harris says she's in. Okay, we don't know that for a fact yet. So what happens during a lame duck session? Because that's what we're in now. Nothing is going to pass through Congress. You're going to have executive orders. You're going to have a lot of pardons and whatnot. So this chart here is the performance of the equity markets, the S&P 500, when you have a lame duck session and the fourth year of a new president. So it's the fourth year. They could still run for a new term. So it's different. A lame duck is that usually either A, they resign, or B, they're in that eighth year. They can't run again. So there's not much for them to do. And remember what they did with Obama in his lame duck session. He wanted to put up a Supreme Court nominee. He did, Garland, and the Senate wouldn't take it up. And they waited for President Trump to come in. So expect all that type of stuff to happen now. So here is what traditionally happens. Going back to 1950 to current. So a lot of data here. Lame duck in blue. This is the S&P 500. The month of August, we generally diverge downward. Whereas if it's the fourth year and they have visibility as to who the probable candidate or the new president is going to be the same time next year, well, then the markets tend to go up. So I thought that this is a surprise to me, to be honest with you, because I figured my thought is that if the president can't do anything, then that's a good thing because maybe there won't be as much spending. That was my knee-jerk reaction. But according to the data, that's inaccurate. So we pay attention to the data. VIX seasonality, and this is very, very good. So VIX broke out last week, not just on a daily time frame, but on a weekly time frame. So I would caution using the dark gray one. Why? That includes 2008 and 2020. Let's go with the light gray one. And you could see that during the month of August through to election day, volatility tends to rise and then drop off after the election. So the markets have visibility after the election and then they can move back up. So this is kind of normal, but this probably means more pressure on the equity markets. So, and we have two sets of data here, VIX seasonality as well as lame duck historical price data for the S&P 500. So both of them are bearish for equities. A little bit of news out of Yemen. This is inflation. This is how I view this. Top general laments the Yemen operation as Putin mulls arming Yehudis, and you have bombing of Yemeni ports. So it appears as though this is just expanding outward and not getting resolved whatsoever. What does that mean? No shipping through the Red Sea. They're all going down the Cape of Good Hope. That means prices for those goods are going up. Why? Fewer ships, higher costs to deliver those goods. That gets transferred to us. That is inflationary. So this is a problem here for the equity markets. And we haven't seen this in quite a while. And the last time we saw tight liquidity worsening in the treasury market was back here, right before the big sell-off in 2020. So, what drives liquidity? Insufficient buyers and sellers. You rates are artificially too low still to this date. You saw yields pop up higher last week. So there's just not enough buyers out there. The government continues to throw these treasuries on the market. There just aren't enough buyers. So what's the resolution to this? It's higher yields. Or what they need to do is to have the Federal Reserve come in and bulk up their balance sheet, buy this debt as they did in 2020. They're going to be the buyer of last resort. And it doesn't matter who becomes president. If you think that it's going to be a Trump presidency and he doesn't call up the Federal Reserve, if yields are ripping through the ceiling and he's not going to tell them to buy bonds, you're crazy. Remember in 2018, he was hammering verbally, publicly, hammering Jay Powell to cut rates. And finally he did. So no party is going to be above telling the Federal Reserve to load up their balance sheet, because the last thing that any party is going to want is this. And this is the rollout, the sequence of events for the great financial crisis. And a lot of this we've already seen repeat itself. Initially at BNP Paribas, Bear Stearns. And remember, March of 2023, you had all those regional banks blow up. Then you had the Bankman Fried, FTX blow up. So it's already begun to happen. And this is why I always caution about the first Fed rate cut is not usually bullish for the markets. It's not, because they're admitting that there's something very, very wrong, that they need to cut rates. And we're already seeing jobless claims move up higher. It's already happening. So we've already got the pressure on the bond market. We have the pressure on the regional banks, which happened to do very, very well last week. And we had the FTX blow up. So now we're waiting for the rate cut. And notice how the S&P 500 declined after those two rate cuts. Then they had to cut 0.75 of a basis point between these two meetings. What did we do? We rallied and failed. We rolled over. And then they voted to keep the funds target at 2%. And then you had the mother of all capitulations. So we're really just at the precipice of what this could be. And the yield curve during all of this was breaking out. And what are we doing now on the yield curve? We're breaking out. Let's go to the monthly chart. Let's go back to 2007, 2008, and take a look at what it was doing back then. Here you have it. Breaking out, ripping up higher. Here we are again. We're breaking out. So again, we can't rule out the stock market making new highs here. We can't do that. But we can't take our eye off the fact that we have many a problem out there, in particular in the bond market, and you have the yield curve reflecting that pressure. What are we going to do? Ignore it? That's why we still carry a short position. Moving on to small caps. Big breakout last week. I'm going to blow through these. Big breakout, but it was rejected at two resistance levels. I'm not a buyer of the small caps until we close above, at least the IWM, above 220 per share. They had a 6 sigma event, meaning this rarely happens. This massive move that we had in a 10-day period. A 3-day period, 10% move in a 3-day period on the Russell 2000. U.S. small cap stocks saw their second largest weekly inflow on record. NASDAQ just made new higher highs, I believe. Was it the NASDAQ? Yeah. Yeah. So now we have higher lows. So we have a higher lows and now a higher high. So it looks as though we're shaping up for a positive open in the morning. You never know. Asia has yet to open. Europe has yet to open. All right, so anyway, let's blow through this. Big move up in the small cap space last week. And Russell 2000 was up more than 10% in 10 trading days. I said 3 before, my mistake. Since 1979, when it started trading, this has happened only 23 other times, taking the first signal in a cluster. Futures returns were quite strong, up nearly 27% a year later and higher 86% of the time. So last week's price action, very, very bullish for the small caps, which is why we are dollar cost averaging in. This is from JC Parent. Big breakouts. These are new multi-year highs on not just growth, but on value as well. Broad-based breakout. Forget about this. All right, let's do some chart requests. Again, folks, I'm going to ask you to like, subscribe. You know the deal. I'd appreciate it. All right, we have KGC. Gold stock. It got overbought. Simple as that. Take the trend lines off, click them back on. There was a rejection. I think that you need a retrace back down further. It doesn't have to come all the way back down to this lower band of support. It can pull back to this upper band of support here at around 830 per share. Ideally, you get a retrace back down to this lower band of support here, and then you get a bullish reversal bar off of it. I do not like these stochastics on a weekly time frame. They're rolling over. I shouldn't say they are. They have rolled over, and a double top in RSI. Daily chart. Yeah. Again, this 830 mark keeps coming up as a price point at which I'd be looking to see whether or not we get support, build a base, and then begin to resume back up higher. I would wait on this one until we hit a support level. Right now, what I'm looking at is a stock that broke support on Thursday, did a reversal bar on Friday. It'll probably move up higher to do a retest. And if it does that, could quite possibly roll over. I would not be a buyer here. I would not be a buyer. I would hold on it. It's still in a bullish uptrend, but you don't have an edge. I would wait for a pullback to the rising support level, then act at that point in time. If it's optionable, you may want to consider trading puts. Simple as that. If they don't get put to you, what's the worst case? You collect the premium. If they are put to you, you get them at a discount. Get the shares at a discount. So that's how I would trade this one. CRWD. Yeah, they really made a big mistake here. I'm not a buyer of this stock. I would not buy the dip. We're not going to know the outcome of this event on CrowdStrike's earnings for a long time. So I would rather be in, and I went over this chart with over the weekend. I would rather be looking at Palo Alto Networks, which has its own set of problems. I'm not in love with it, but I'd be looking for support to get hit. And then I would look to put on a dead cat bounce trade. So I would take Palo Alto Networks over Qualcomm. Why? Headline risk. I mean, you had Elon Musk come out on Friday. All of his companies, he had CrowdStrike taken off. What other companies are going to come out and provide that headline risk? We don't want to deal with that stuff. E-minis are making new session higher highs. URA. Wow, they really killed this, huh? It's in a downtrend, but as noted by this lower band of support, we have support immediately above. I would wait for a couple of days of consolidation here to make sure we have stopped going down. Weekly view. This is not an investment. For quite a while, you had the nuclear is the new big thing, and it drove URA up higher. But last week's price action was extremely bearish. This is a classic double top. Here you have it. Lower high. And then we broke to new lower lows, and we closed there. So while we may bounce, I think that URA goes lower, could be measurably lower. This is a horrible, horrible candlestick, a bearish key reversal bar, one of my top 5 favorite candlestick patterns. Link below, 5-part video tutorial, free. Take advantage of it. OPTT. Let's go monthly here. It's so tightly traded, you can't even use the monthly chart. I think you need to see it pull back and touch 25 cents. It looks as though we have stopped going down, and they are probing a bottom here. Monthly Stokes, we still have several trading days left to go, are hooking up nicely, as is RSI. Now, this is a micro cap stock, so you're going to be really, really careful here. So I would wait for a retest of 25 cents with a tight stop right below it. I think it's looking optimistic, though. But right now we remain, you got to take into consideration what we are in. What's the path of least resistance? And this is why we go to the monthly charts and weekly charts first. What's the path of least resistance? It's clear and defined. We remain in a bear market. This will not be a new bull market until we break out above, let's call it 80 cents a share. Until such time, we treat it as if it's a stock that's just putting in a bottom. You're going to get backing, filling, lots of head fake breakouts, probably some breakdown point failures where they drop it lower and rip it back up higher. I would be a buyer on those events, bullish key reversal bars. But right now, I would wait for 25 cents to get tested. You saw a nice rip back here the week of July the 1st. Then they sold it off, topping action. This is implying that you have resistance up at 47 cents. So wait for it to pull back to 25 cents, or if not, break out. And then add open a position. All right. Franklin, you're very, very welcome, my friend. Talk to you tomorrow. Bob, what about Hope and then the video? All right. HPE. So I have a theory with Dell and with Hewlett Packard. Typo. And that theory is that just like Apple announced the other day, that they're going to have a massive refresh cycle because of AI. You're going to need a lot more computing power. So I think that these names are going to benefit not just by the server side, but by the PC side as well. So longer term, I'm bullish on both Dell and Hewlett Packard. I don't know which one has more exposure to the corporate AI side, but I think that you're going to have a massive, massive refresh cycle in the United States globally. And both of these names are going to benefit, but you got to be willing to sit it out because I don't know whether or not that's begun yet. Here's a monthly chart. It looks like it has begun because you take a look at, oh, they did a split here. Let's go to Dell. You have more data here. Take a look at Dell. They split this too. I can't go back. Okay, I don't have a lot of data here for these names for whatever reason. I know HPE changed their symbol, but it looks as though both of them are breaking out a long-term basis. They're a little bit extended now. On any pullback, I'd be a buyer longer term. I would tuck them away. You're going to have a refresh cycle here, and that's going to be good for these names. They're going to benefit. And these are the two largest players. It's not going to be IBM. They sold off their PC division, Lenovo, and that's only a small segment of that company. These are more of a pure play on the server side and on the consumer side. So that's my take. I'm bullish on both of them. Not right now, though. HPE is a little bit extended. Dell is not looking that good either. I would wait. I would buy them on a pullback. Let's take a look at a daily view. And you're kind of getting the pullback. The question is this a double top? Are we going to break support? If we break and close down below the lows of June, that puts us into a new downtrend, a bear market. And I don't want to buy in a bear market. I would rather wait for on a weekly, on a monthly chart, the shares stop dropping and then begin bull operations small, nibble, 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 and then watch for higher lows, higher highs, and then aggressively build a position. We're not at that stage yet, right? We're worried right now about whether or not we break down below the June lows. So I would be very, very cautious here about these names. If you want to nibble at the support level, because it will touch it just as it did back here, but it put in a failed breakout. Nibble, put a stop loss right underneath, stay small. At least you're in, you scratch the itch. That's how I would play this. You can only power HI with nuclear, gas, coal, hydro, wind. We're on the cusp of fusion power. Okay. I don't know what that is. Is that what? Isn't that nuclear? My bank uses Dell and Lenovo for their staff. Okay. Good info. But Lenovo that's a Chinese PC company now. Bob, you said you didn't look like copper because I was looking at HBM, which is copper. Yeah, well, copper is a train wreck. HBM, yeah, I mean, I wouldn't want to own this right now. I wouldn't want to own this. Uh, to be fair here, we could be building the right side of a base on this stock, right? Because here's your double bottom setup, your W formation. Here's your pivot point up here. We did, in fact, have an intra-month breakout above that mark. I'd be a buyer of the shares above $10.60. Now, if they pulled all the way back down here, let's say to $6.30, I'd be a buyer there, nibble, nibble, nibble. But I wouldn't be an aggressive buyer until we got the ultimate breakout. And then you'd be in a new bull market on HBM. Fusion fuses atoms, nuclear splits atoms. Fusion fuses. Ah, okay. Gotcha. That's interesting. Who's the lead player there? Falcon, SEDG. Wow, this really fell apart, huh? Um, out of the ashes may rise a phoenix here. Let's clean this up a little bit. So, as an investment, no way. I wouldn't be a buyer here at all. But as a trade, you may have a trade setting up because what have we done? We bounced off. This is the algorithm, not me. I didn't put these. That's the algorithm. Click of a button. Trend Spider, 35% discount code below. And we're holding this support level. Now, this is one where you could either A, sell puts, deep out of the money puts. B, buy the common, stay very small with a stop right below 23 bucks a share and get out if you're wrong. Now, if it rallies, especially if it rallies up above 33.50, we're probably coming all the way up here to the low 40s, and I would get out until I see whether or not it could break out above this upper band of resistance in red. So I think there's a trade to be had here, but it's a dead cat bounce trade, not an investment. So you want to be in, know your price targets, and then get out. And if it breaks out above this upper band of resistance in red, then okay, then we could start looking at it as a potential investment, not right now. I will leave it off. I think I saw Intel here because I am over. Now, I did a video a couple of weeks ago on Intel, and I referenced that I gave it a price target of $37 per share. And I think we got there. Yeah, look at that. What was the high here? The high was 37.16. All right, so I was right on the price target. So we saw this, right? The shares stopped going down. They consolidated. Buyers moved in. And this, in fact, I believe that this was a Bollinger Band squeeze as well. Let's validate that. What a Bollinger Band squeeze is when you have, yeah. This is a very, very tight. These are the Bollinger Bands in black. They were trading inside the Keltner channels, and this was just setting up for a massive short covering rally. It happened. What does it do now? I don't know. The trade, to me, is done. If it begins to break out above 35.50 per share and it closes there, then I would revisit it as a long. Right now, all I see here is a short covering rally that has already occurred, and now they're selling it off again. So the trade is in the rearview mirror. I'm not a buyer here. I would wait till earnings come out, get a vibe for how they roll out. Are they playing catch up in AI? Are they seeing any improvement whatsoever? And if so, then perhaps we have a trade. Till then, AMD is the king, which I never thought I would say 10 years ago. With that, folks, don't forget, like, subscribe, you know the deal, and leave a comment below if you agree or disagree on any topic. And don't forget my 5-part video tutorial, my top 5 favorite candlestick patterns, link below, Trend Spider, 35% discount code below, and I will send you this scan. If you sign up, I will send you the link for this scan. You can run these scans as well. Here, I'll run it, and look at all these that'll pop up. Bollinger Band squeezes, all of them. I will send you this link. In fact, I will give it to you right now. Use the link below, sign up for Trend Spider. Everybody have a profitable trading week, and I will talk to you soon. Take care. Be well.